Many thanks for making a date on the marketplace today. The lack of reliable data and low level of documentation on exploratory fields continues to have a negative impact on efforts by government to bargain higher returns from global oil exploration companies. The situation has compelled the Ministry of Energy to conduct a strategic legislative review for the oil and gas industry. The review process, which has begun with stakeholders and industry players, seeks to examine government's new policy to accelerate growth in the sector to help meet its production target of 1 million barrels of oil per day. Yes, Energy Minister John Peter Amewu.
As a developing country, the content of our regulatory frameworks are yet to be fully tested. In an industry young as is largely under-risked, with oil recovery averaging 26% compared to mature provinces of about 50% elsewhere, and a regulatory framework passed only 3 years ago, there is enough justification to test the laws against the industry realities. This government is willing to travel to the journey of providing laws that support the growth of our emerging industry. Ladies and gentlemen, industry legislations and regulatory institutions must be facilitating the growth of the industry, not to constrain the growth to the adverse effect of the potential investor. Mr. Chairman, I wish to state, however, that our desire to improve on the investment climate of the oil industry is mainly to provide certainty and predictability to our investors and to reward investors that believe in our country and willing to invest and meet their work obligations. This should not be misconstrued to mean that we are going to give away freebies to potential investors. We are resolved to build partnership with serious investors whose commercial objectives are aligned to our development objectives. We are interested in investors that will obey our laws and rules, regulations as a country. We are experiencing and expressing our commitment to support companies that are ready to work with our people and willing to transfer skills and technology to our institution.
And in a related development, stakeholders in the oil and gas sector have charged the Ghana National Petroleum Corporation, GNPC, to reconsider its crude oil pricing mechanisms. Some participants in the Oil and Gas Pricing Forum have raised concerns over the current pricing regime being used by the GNPC and called on the National Oil Marketing Company to be more transparent in the crude oil pricing and marketing. There's more in this report.
Various stakeholders of the oil and gas sector have taken part in a forum on crude oil and gas. The issue of GNPC's pricing regime was topical, as many of the participants criticized the strategy adopted by the National Oil Company to price its parcel of crude oil sold on the international market. Chairman of the Public Interest Accountability Committee, PIAC, Steve Mantiao, said there is a need for GNPC to consider hedging its crude oil like other trading companies in the sector.
I think I support much more transparency in the way the price options are exercised. And if it would take a committee to ensure that there is that price option and transparency, then of course I'll be for it. But again, saying that, I'm also mindful of the fact that if you're not careful and you impose on these transactions a certain heavy bureaucracy, there's a way in which we may not be able to also become very efficient in the way we market our crude, because these things are very fluid and evolving by the minute and second, and therefore for a committee to meet before certain decisions are made could also slow the process on our side. So we need to be mindful of that. I think the key concern here is about transparency, the need to let everybody know how we set our price options and when and who is involved and all that. My major concern, really, before coming here, has to do with the tendency to contaminate the whole crude oil trade with transactions, other economic transactions that come to impact on the achieved price. And I'm here referring to, for instance, if you talk about Jubilee, we have the CDB loan in there, and then if you talk about the 10 crude, we have the, the Litasco transactions, some loan agreements all in there. An aspect of the concern I have has to do with even whether or not, with the Litasco, whether the loan went to Parliament before and duly approved, before embarking on these kinds of transactions.
CEO of the Chamber of Bulk Oil Distributors, Senor Hosi, on his part, says the current system does not support adequate transparency.
One is not to suggest that anything funny is going on, but I'm saying that the systems we have right now do not really promote adequate transparency. We have a problem with the pricing options if you're looking at it from a Ghana angle. If I have 4 options and I am paying possibly about way after all the options expire, and I can rig which option I actually choose, because I'm supposed to choose it 5 days before I lift. Once I can rig that, I can make more money. Within a small group of people, public officials, private officials, whoever it is, we can shortchange the state easily. So there's growing suspicion about the objectivity in the process, which is likely not existent. But let's clean up the suspicion by making sure there's a lot more visibility. So if a pricing option is supposed to be chosen 5 days before time, the whole Ghanaians should know that UNIPEC has chosen 5 days before time.
In reaction to these concerns, the marketing manager of GNPC, Dennis Baidu, supported the current pricing regime and expressed satisfaction with the current market dynamics that GNPC operates within.
The essence of the forum is to help our numerous stakeholders to fully understand how GNPC markets the Ghana's crude oil and Ghana's natural gas. We report to a host of state agencies, and we also collaborate with a lot of state agencies. What you realize is that some of them really don't have a deep understanding of how we operate.
Other participants were happy with the forum and say it opens up GNPC for healthy criticisms. Fred Duhos report for Joy Business.
Turning away from petroleum now, CEO and President of the Chemanting Group of Companies, formerly the Comet Group, Nana Odeneho Chemanting, has lauded the proposed rollout of the National Mortgage Fund and says it is a step in the right direction. Speaking on the business edition of PM Express, Nana Chemanting said the initiative by government is a step in the right direction, but advocated formalization of the sector first.
Our present housing policy, which I believe was launched in 2015, was based on the beginning where from 1989, where the World Bank brought in the idea that we should privatize housing from the state housing type, where the state housing were supposed to build houses and the people access them for decent living, and they were high purchases. So through the World Bank and then the Senate and others, HFC was established. Okay. Yes, and they gave us some money and started. That brought about Committee 18 and those places using TDC. It has worked well to a point, but by the 90s, in the middle of it, it started changing again. So after that, there was a concern, and then this idea of having a central, having a national policy where the state will play a major role. Sure. But because of our background of not encouraging government-led housing delivery, it is based upon the fact that the private sector should be able to produce the houses, and then we on-lend it or give it out to people. The most interesting thing that I saw, or I have seen, is the issue of having a national housing fund. True. Yes, and the basis of it is to enable people to access or get cheaper mortgages. And I think I'm very happy about it. Okay. First, for the fact that it is our fundamental human right to be housed or to have housing. And it is part of the Constitution. Because your right to live, your right to have food, your right to have education, your right to be employed. These are all part of entrenched provisions of the Constitution. Okay. But unfortunately, for a long time, the housing delivery and housing ownership has been quite informal. So I have been advocating since 2005 that we should turn the housing into a formal sector of the economy so that we could all benefit from it. Because it looks quite disjointed, it looks disorganized. So with this, now the way we are going, I'm very, very happy.
He noted the cost of money in Ghana is a major setback for mortgage affordability and, by extension, home ownership in the country. He believes that government's intervention in the housing and mortgage market will help lower the cost of money for mortgages.
Depends on the cost of money. In this country, the cost of money is so high, which is not the fault of anybody, but it's the system. And with the digitization, there's correction that's being made. The international best prices I've seen, most mortgages are around 4.5 to 5%. And on the market, because of the margins that a mortgagee will put on, or a mortgage institution who is not a bank will go, because people will prefer to deal with mortgage institution because the kind of process is faster and there are a lot of administrative bottlenecks. So it's about 6.4. And when you look at Germany, it's similar. Britain, similar. So internationally, I have taken for granted that if we are all going to give out loans or mortgages, and it's going to run about 7% or even maximum 7.5, I don't think 30 years mortgage, a chap at the age of 25 coming out of school and with a wife having, or whatever it is, a partner having a mortgage and taking 30 years to pay for a property of about $50,000 for a 2-bedroom, where by the 15th year you may have a value in it in terms of appreciation, and at the same time going to have your equity in it, will make you even to revise and take a bigger property. So for that matter, the most important thing about it is the cost of money. But
You're still watching the Marketplace live on Joy News. Now, diluting state shares in investment firms for the private sector is one of the best decisions Ghana can make. That's according to Deputy Managing Director of the Ghana Stock Exchange, Eko Afeji. Government has indicated plans to offload majority shares in selected state enterprises to be listed on the Ghana Stock Exchange to allow the private sector to be part of ownership structure of these entities. In an interview with Joy Business, Eko Afeji endorsed the idea and believes it will encourage more listings on the market.
When you go back to history and look at the establishment of Ghana Stock Exchange, the premise for setting it up was basically to have government privatize state-owned enterprises through the market. But that has not happened over the years. Only a few companies have been privatized. So if a top government official is coming back saying that, look, we need to take a look at the state enterprises and find out the good ones, the ones that we can make sure that they can go out there, raise capital and list on the market and allow Ghanaians to participate. Then that is certainly good news, and it can impact greatly on the market. One of our challenges is getting more listings. How do we get more listings? You talk to private entrepreneurs, most of them have family-owned businesses. It's difficult for them to bring others in. We haven't had it's easy trying to get government to offload. So if this is a new policy that's coming up, then that is good news for the market and it's going to impact very positively on the market.
You don't see it as a way of bullying the other players in the market, because they'll say governments, these are government institutions, they are coming with some muzzle.
I won't say that they're going to bully anybody on the market. What I would say is that it's rather going to attract others to also come onto the market. When private sector also sees that, after all, government-owned entities are also going to the market to raise long-term capital that they need to expand. Then why are you sitting there and taking short-term loans to finance long-term projects? And that is where the main issue is. So you're likely to rather see a more positive impact of attracting other potential issuers to also use the market.
Now, shareholders of Unilever Ghana are getting dividends of 80 pesos per share after the company posted profits of 191 million cedis for 2018. The figure represents a 296% increase from the 2017 profits of 48 million Ghana cedis. Edward Ifa is board chairman of Unilever Ghana Limited. He declared the dividend payments to the company's shareholders at its 45th annual general meeting held in Accra this morning.
Unilever Ghana Limited results for the year ended 31st December 2018 shows a revenue growth of 10% from Ghana cedi 575 million in 2017 to 632 million in 2018, mostly due to an increase in volume sold. operating profit before tax was 250 million cedis, representing a 283% increase over 2017 65 million. Profit after tax therefore improved by 296% to 191 million compared to 48 million in 2017. Included in the operating profit for the year is an amount of 89 million being profit on disposal of the spreads business, which was disposed of in 2018, and a reversal of management and technical services fees provision amounting to 111 million cedis. Dividend. The Board of Directors hereby propose a dividend payout of 80 Ghana pesos per share from the 2018 profits, amounting in total to 50 million Ghana cedis.
So we'll be bringing you some more developments at that AGM in our subsequent bulletins. But for now, Managing Director of Zenith Bank, Henry Oro, is confident of improved tax compliance if the GRA adopts new e-platform methods of tax payments. Speaking at the maiden edition of the Zenith SMEs and Corporate Breakfast Forum, Henry Oro stated the financial sector is ready to improve compliance in the country.
Zenith Bank Ghana is partnering the Ghana Revenue Authority GRA to ensure tax compliance in the country. At the maiden edition of the Zenith SMEs and Corporate Breakfast Forum, Managing Director for Zenith Bank, Henry Oro, says the move is to make tax collection very easy and flexible to penetrate the informal sector through the bank's e-platform services.
We are doing a lot in this regard with the GRA. Been quite a lot of reforms in recent times, and we know that in the last 2 years, critical around this reform is the digitization plan of the GRA, where the GRA tend to make collection of tax very easy and very accessible to the taxpayer. And Zenith, along those lines, because we are built on a digital platform, Zenith is an e-bank, and we run most of our operations through the e-platform.
Meanwhile, Commissioner General of the GRA, Emmanuel Kofi Nti, revealed that new tax reforms targeting the informal sector will also help improve upon tax compliance.
These reforms are meant to motivate and encourage the private sector to thrive, to be able to contribute the appropriate tax revenues to the state to push our development agenda. It has always been said that the private sector is the engine of growth in this country. I am inclined to believe that the theme for this breakfast forum, empowering the private sector to maximize revenue through compliance with Ghana's tax reforms, is in line with the statement that the private sector is the engine for growth. It is therefore very apt and appropriate. I wish to draw your attention to the mission of Ghana Revenue Authority, which is to mobilize revenue for national development in a transparent, fair, effective, and efficient manner.
The Zenith SMEs and Corporate Breakfast Forum focused on tax compliance for successful business operations. It was also themed empowering the private sector to maximize revenue through compliance with Ghana's tax reforms.
GCB Bank has recorded positive growth for 2018-2019 financial year, having suffered some losses from the takeover of UT and Capital Banks. The development compels the bank to seek some 400 million cedi support from the central bank. Here's more in Ebenezer Sabute's report.
After the takeover of UT and Capital Bank, GCB Bank began an integration process which led to the closure of more than 20 branches of both banks. According to the Deputy MD of GCB Bank, Socrates Afram, this affected performance of the bank, leading to some loss of 1 billion cedis out of a total of about 2.3 billion cedis deposits it took over from the two banks. Taking turns at the facts behind the figure series at the Ghana Stock Exchange, Socrates Afram said the bank has recorded some pickup in deposits and revenue.
Prior to the assumption, we had substantial amount of interbank investments. And so as a bank, because of these heavy withdrawals, we had to even liquidate all our investments in that space, to the point that it got to a stage we needed to even go to the central bank to tell them we are bleeding too much from this process, so we need support. We took 400 million from the central bank at commercial rate for that purpose as well. And so the 2.3 we met, we lost about 1 billion up to December 2017. Subsequently, we've been able to get some money back. We've been able to tap into business of some of the customers that hitherto we didn't have, especially in the area of trade.
Meanwhile, Managing Director of GCB, Ray Sowa, disclosed that the bank is in talks with a private firm to venture into the insurance market.
Insurance penetration in this country is very low. It's not even in double figures. So it presents a real opportunity for an aggressive player to get into the space and do new things. We are looking at things like agri-insurance and so on and so forth. That is how India has grown. So you want to take advantage of some of those things and also create an opportunity for people to invest monies in a different way. It shouldn't always be savings and loans, banks, and so on and so forth. People need to be able to invest in insurance, in pensions, and whatever.
The bank is also converting one of its subsidiaries into an investment company, which will help to expand its presence.
Now, after 5 months of nurturing their new ideas, participants in the 2019 Agri-tech Challenge got the chance to pitch their business plans to a panel of expert judges for the first time. Their aim is to help to solve some problems in the agricultural value chain. Karen Dudu reports.
Plastic waste has been a major problem facing Ghana and the world at large. Averagely, conventional plastics takes about 400,000 years to degrade from the environment.
Over the period, these young entrepreneurs have been coached through a series of business development courses. They've also taken part in in-depth market research tours to help deepen the understanding of the challenges facing Ghana's agricultural sector. At each stage, the agri-techies have been encouraged to identify areas that would benefit from technology innovation and new ways of working. Business ideas developed include pest control, animal feed production, post-harvest loss, and e-extension services, among others.
How do you manage and preserve the shell? How do you manage and preserve the husks?
Founder of Wabab Investors and guest speaker of the event, Abinamwa, entreated the participants to endeavor to accomplish their goals.
Nurture and use your relationships and networks to further your dreams. Have high personal and business integrity. You must be open and accountable. And finally, reinvent or die. But as the famous line from a recent episode of Game of Thrones says, there's only one thing we say to death. But I say to the death of our hopes and dreams, not ever. Not ever will our hopes and dreams die.
Out of about 100 participants in the 4th edition of the KIC Agri-tech Challenge, only 7 are female. Raising concerns over the low patronage of women, Ideation team member Constance Swanika appealed to women to also venture into the agri-tech space as the next big step for Ghana's economy.
Just looking at, the vast landscape of opportunities, there's no reason why you can't take it up. And as I stand here, I would tell, any young lady listening to me that if I've broken through the barriers and where you find, areas where you don't have a saturation of women, that is where the real opportunities are. And so if, you have the opportunity to enter into a male-dominated sector, I would really encourage you to, because it's really opportunities waiting for you.
Some female participants also share the experience in the journey so far as a way of encouraging other women to participate.
Agriculture, I will encourage more ladies to go into it. We are talking about women empowerment. It's not only in the beauty industry, it is not only in the finance industry, but we need more women in the agricultural sector, because more women there means that we'll be able to do much more.
We have benefits as women because we're able to take the little we have and make more from it. So they should just leverage on that. If it's agri that they want to go to, whatever within the value chain, they should just start. They should stop thinking and planning and just get to the market. And then they can leverage on their ability, the inward ability, and then make it start working.
Business teams which will survive the first pitch round will continue working on their plans, receive more coaching and training, and will progress to the second pitch event in July 2019. For Joy Business, Karen Dodo.
Who I consider myself a marketing engineer.
Time to go now, but not until we bring you some health tips on as part of our Joy Business Health and Wellness Trade Show.
Welcome to today's Joy Business Health and Wellness Tip. Let's learn more about gynecologists. Menstrual problems, contraception, sexuality, menopause, and infertility.
And that'll be it for the marketplace today. Many thanks for your company. Have a great weekend.